Ron Barron, the legendary investor, explained in an interview recently that being a long-term Tesla investor could certainly make you a millionaire. Ron Barron is no stranger to Tesla and playing the long game. Barron projected in 2016 that Tesla Incorporated would become one of the world's most valuable firms. With a 1% investment in the company, his firm, Barron Capital Management, was one of the electric automaker's top investors at the time. His patience paid off, and he made millions of dollars. Why does he say we should never be Tesla stock? What is his investment strategy? Why does he have so much faith in the brand? Keep watching to find out. For years, investor Ron Barron has been one of Tesla's top stockholders, and he has no intention of changing his mind. Recently, Barron told CNBC that he believes the electric vehicle giant's high-flying stock has a lot more space to climb and intends to keep holding his shares for at least another 8 years. On CNBC's Squawk Box, Barron stated, "I think we're going to make 3, 4, 5 times our money on Tesla from here. I believe this is the very beginning of what Tesla is doing." In retrospect, Barron projected that Tesla would grow into a major player in the automotive industry. With a 1% interest in the Silicon Valley automobile, his firm, Barron Capital Management, was one of Elon Musk's early investors in 2016. Barron Capital, Barron's eponymous investment business, is a long-term equity investment organization that specializes in providing growth equity investment solutions. Following Tesla's meteoric rise over the last 3 years, it currently has around 12.8%, which is about $6.2 billion of its total assets, invested in the electric vehicle maker. Barron Capital manages a total of about $58.9 billion in assets. Between 2014 and 2016, Barron Capital, Barron's eponymous firm, invested around $380 million in Tesla at an average price of slightly over $50 per share. Barron alluded to producing $54 billion in profits for his clients, and that $54 billion in earnings includes around $6 billion from Tesla from a $380 million investment 7 or 8 years ago. Despite the odds, Barron sold 1.8 million Tesla shares for his firm's clients in March of this year, describing the transaction as painful but necessary for risk mitigation. Left to Barron, it seems he would never sell Tesla stock. He seems far from ready to cash in. While he says he may still sell Tesla shares to reduce his clients' risk, Barron claims it's much more profitable to hold on than to sell right now. Investors should look past near-term speed bumps like the company's latest delivery miss. According to Barron, Tesla has been doing quite well regardless of its stock performance. It's true that Tesla didn't exactly meet up to certain estimates in the first quarter of 2022. In the first quarter, Tesla delivered around 310,000 vehicles, falling about 7,000 vehicles short of Wall Street's expectations. However, considering variables such as the still ongoing chip shortage, macroeconomic challenges, and so on, experts are still pleasantly surprised Tesla was able to pull this off. Barron stated, "They were supposed to do 317,000 cars in the quarter. In 4 years, they'll be doing 1 million automobiles each quarter, and 10 years out, it'll be around 5 million cars per quarter." Experts say Tesla's car industry would be nearly the size of Toyota and Volkswagen, the world's 2 largest automakers combined, at 5 million vehicles every quarter, or 20 million per year. This might seem far too optimistic, but Tesla's new European factory could actually make the brand stand a chance. According to Tesla, Giga Berlin will be Tesla's most advanced and efficient facility to date. In addition to producing Model Y cars at a rapid pace, the Grünheide site will house the world's largest battery cell manufacturing facility. Experts say the factory will receive capacity restrictions at Tesla's gigafactories in Fremont, California, and Shanghai, as the business, like virtually every other automaker, grapples with growing labor and input costs, supply chain challenges, and component delays. This is very good news for the brand, its stock, and investors in general. Barron has been known to say that Tesla is the most significant investment he's ever made. Even after selling some Tesla stock, Barron still has around 41% of his largest funds invested in the carmaker's stock, making him one of the world's biggest Tesla bulls. According to records, Barron Funds was the 12th largest stakeholder in Tesla at the end of 2020. Other significant investors include Baillie Gifford, situated in Edinburgh, Scotland, with 11% of his portfolio invested in Tesla, and Cathie Wood's ARK Invest with 8.3% in Tesla stock. Barron's riches have risen in lockstep with his fund's successful Tesla bet. According to Forbes, his net worth has increased from $2.3 billion to $4.5 billion in March 2020. This is largely due to Tesla's 728% increase in the previous year. Millions aside, Why does Barron have so much faith in the electric vehicle brand? In a recent interview with Bloomberg Wealth's David Rubenstein, the legendary investor stated that Elon Musk's enterprises are innovating at the speed of light. Barron also reveals why he invested in Elon Musk's electric car firm in the first place. He says, "I thought the possibility with Tesla was to transform the cars we build in the United States from gasoline to electric. You had to be a fanatic engineer, a great leader, and have a good understanding of technology in order for this to happen." Barron explained that he was betting on Elon Musk while the majority of people were betting against him. Tesla has unquestionably had a lot of success recently. In January 2021, the business released 4 battery-powered models into the worldwide market, resulting in revenues of more than $31 billion and a market-based valuation of more than $800 billion, up from around $1.7 billion in 2010. Throughout its history, Tesla has continuously challenged its critics. Many people still have reservations about the company, and Elon Musk has had to continuously demonstrate his worth in order to take over the world's most valuable automaker. Although Tesla stock struggled a lot so far this year, Tesla Incorporated has experienced greater volatility than any other stock in the history of automobiles. Thanks to its similarly contentious CEO Elon Musk, it has gone from a disruptive startup to a social media favorite. No company has possibly better epitomized the market's purported speculative overvaluation than the electric vehicle maker, which has just seen a dramatic decline in its stock price during the first quarter of 2022. The stock has been in a steady slide, extending a volatile trading period spurred by fears of inflation, rising interest rates, and the risk of a European clash. However, this pattern was not exclusive to Tesla stock. The market suffered as a whole. Tesla's stock finally rose at the end of the quarter, after the stock hit an intra-quarter low of $700 on February 24th, down about 34% for the year. But the stock price then surged by more than 50% until the end of March, capping off at an incredible turnaround. Several investors were rewarded for their unwavering faith, and Barron was one of them. In a recent interview, Barron stated that his faith in the firm was never shaken during those tumultuous times. He claimed that if it were up to him, his company would acquire additional Tesla stock, as he personally owns over 1 million Tesla shares. Barron's rule of focusing on the business and not the market sentiment is excellent advice, and we agree that the company is in excellent shape. According to some experts, Tesla is on track to beat their record-breaking 2021 statistics despite the challenges it's faced so far. Tesla's Austin, Texas plant is expected to start producing Model Y cars by the end of the first quarter of this year. Gigafactory Texas, also known as Tesla Gigafactory 5 or Giga Texas, is a Tesla car production plant near Austin, Texas, and has been under development since July 2020. According to Wedbush analyst Daniel Ives, the start of production in Austin and Berlin is crucial in meeting the demand for Tesla. Ives estimates that the capacity will have risen to 2 million by the end of the year, putting Tesla on track to meet Barron's expectations. With a 12-month price objective of $1,400, Credit Suisse analysts Dan Levy and Trevor Young raised Tesla to outperform earlier this year. According to the analysts, Tesla's edge over other original equipment manufacturers, as well as its ability to sustain a high profit despite supply chain issues and plants working at lower capacity, justified the upgrade. There is little doubt that as the company expands and develops new goods, it will become even more relevant as it moves beyond its current position. Tesla is currently operating at a faster rate to meet its goals, and the company has prioritized plant expansion because electric production and delivery are directly tied to profit margins. This means Tesla is really just getting started, and playing the long game like Barron is more likely to make you a millionaire than short-term gains. Do you agree with Barron? Comment down below.